Notification.
Because I was in the wrong place. Okay, so we've already talked about the operating activities section. You know, we have three: operating activities, investing activities, financing activities. So all the work you've done so far is just on that operating activities section. It's got the most stuff on it. It's going to be the worst. These other two are not bad. So, you know, this ought to be simpler, I hope. Okay, so the first thing we're going to look at here is land transactions. So the cash flows from or used for investing activities section reports cash inflows and outflows related to a company's long-term assets, which is property, plant, and equipment. It's your buildings, your land, your machinery and equipment, your vehicles, anything like that that's an asset that's going to be useful for a long time. Things that we depreciate except for land. Those are your long-term assets. So that's what's going to, any transaction or cash in or cash out from those types of transactions, buying, selling, that's going to go in the investing activity section. Okay, so your homework, you're going to have, it's going to look like this. You're going to have a drop down for action. And I've got you like A through E on here to choose from. And I couldn't figure out why you have only cash flows from investing and not used for. And then this one was finance. I thought maybe I wrote it down wrong. I went and looked at it. When you get to the place where you actually need the one that's used for, so, I mean, either use these letters or it's going to actually show you the narrative. So, part of cash flows used for investing. So, I'm going to put F on there. You can use the letter. You can actually write it out, whatever you want to do. So, we're going to look at each one of these based on this information they gave us and figure out where it would go. So, we got Russell Corporation. They purchased land for $160,000. Later in the year, they sold a different piece of land. It had a value of a cost of $185,000. They sold it for $210,000. So how are the effects of these transactions reported on the statement of cash flows? So that gain on sale, the gain on the sale of the land, where would we show that? What section would that go in? I need to get a button with Jeopardy music on it so I can push it.
Is it deducted from that?
It will, but what section is that?
That's
The gain, just the gain.
so just operating.
It's operating. Remember, the gain or loss from any kind of asset sales is going to show up in operating. We're either going to add it back or subtract it out depending on which one it is. So that's one of the things. If you're not sure, go back to your page 5 and look. So, in that step 2 on page 5, and that this here. Just go to it. Cooperate. Where are we? 2 more pages. This thing is slow. This right here. So you got, this is, all this right here is your operating activity section. All of it. So anything you see here is going to go in the operating activity section. You got losses on disposal of assets that you would add back. Gains on disposal of assets, you're going to take that out because it's not actual, that gain number is not the actual cash amount. So we've got to do something with it. The actual cash is the sales price. Okay. So remember to refer back to this. Give me 5 minutes to get back to that page. It's like it goes into a coma or something. Where are we? Hello. Okay. not there yet. This is so weird. I guess I should just go slow and be patient. I'm not good at that. So I won't push the button 10 times. Okay, so gain from sale of land. Which section is it going to go in? Which one of the three is it going to go in?
Operating.
Operating activities. So we got these choices to choose from. And like you said, net income. So are we going to, it's going to go in the operating activity section, yes. Are we deducting it from net income or are we adding it to net income? We'd be deducting it. So it's C, deduct from net income. And I'm going to put right here operating activities section, just so you know. Because net income is in the operating activity section. Okay, so how much is my gain? How would I calculate my gain?
25,000.
So how did you get that?
So value minus value.
Right.
Lost funds.
So the 25 comes from 210 minus 185. You got your sales price here. You got, they say book value. With a piece of land, book value and cost is going to be the same thing because you don't depreciate land. Book value for an asset you do depreciate. That's what you're going to use in the calculation of the gain anyway. So book value is the number you need to use to calculate it. All right, so cash received from sale of land. What are we going to do? Where does this fall in these choices? No effect, added to net income, deducted from net income. Part of cash flows from financing, part of cash flows from investing, or part of cash flows used for investing. Which one does it go under?
From investing.
Okay, so this is part of cash flows from investing. The reason it says from is because money comes in. You're receiving money from investing. So I'm going to say cash flows from investing. And how much is that? 210,000. We're going to show that as a positive number because that's money coming in. The whole reason we're doing all this, I mean, you're starting with net income. That's the income statement. That's revenues, revenues, which is your income, minus expenses equals net income. So when you sell a piece of land, you're going to debit cash, credit land, and possibly credit gain or loss. So the gain or loss piece will go on net income, as part of the calculation for net income. But the cash and the land piece, they're on the balance sheet. So if you don't address those, then you're missing a part of the cash that came in and the cash that went out. So the cash received from the sale of land, we've got to pick that up. It's not in net income. We got to add it to it because it's actually cash that came in. And then they actually purchased another piece of land. So where would that fall in our choices?
F.
Yeah, that's going to be F. Cash flows used for investing. And that is how much?
160.
160. And since we have money, that represents money going out to buy this land, we'll show it as a negative amount. I don't know if your homework, if you have to put minus signs or not, you're probably going to try it both ways. I don't know. They probably tell you in the directions. Cengage is not always consistent, so I don't want to tell you something that'd be wrong.
They wanted negative signs on the last one. So.
Well, yeah, the description is telling you, but who knows? Who knows? It's not necessarily going to make sense. All right, so this next example, y'all take a stab at that one. I'm gonna give you like 2 minutes, so see how you do. Stretch. Ugh. Just make it feel better. So I don't walk around like a decrepit old person. That's all it is. Stretch out. I'm all bound. I guess I should have put it. Yeah, I did. Okay, cool. That was a coincidence. Y'all get that? Yeah. Okay. The next thing we're gonna do, because I didn't have it in your worksheets, oh gosh, I'm scared to do this. Last time I did this, I lost my viewers, but we'll try it. Let me get the assignment pulled up and then we'll, yeah. Okay, let's do it. All right, so I'm gonna stop sharing. Share it again, but I'm not sure what's gonna happen when I do that. I don't know if they're gonna see that. Yeah, they did, didn't they? Okay. It looks like it. I just hope it's gonna go to, yeah, it looks like it. Too complicated. You may have to check it again and make sure they're seeing this. It's only like one person. Your buddy. All right, so start taking it now. All right, so this is your homework. The first three are just like what we did. Can you see it? Is this? I know, it gets really loud and it'll go.
No, everything.
All right, so the last two, number 4 and 5, I didn't include it in your worksheets because I didn't really realize that there was a problem for it. A problem that I actually put out there. By then, I already had your sheets done, so I want to look at this one. And because this is actually your homework problem, you should write the answers down because it's a freebie. Okay, so, huh? It's not hard. All right, so this is looking at selling equipment. Can y'all read that? I made it bigger before, but it's just, I can only make it so big and keep everything on here. All right, the problem says an analysis of the general ledger accounts indicates that office equipment, which costs $2,025 and on which accumulated depreciation totaled $84,375 on the date of sale, was sold for $101,250 during the year. Okay, an analysis of the general ledger account. Somebody look at the balance in the account, okay? Equipment has $2,025 in it. Accumulated depreciation has $84,375 in it. These are not current year transactions. Or, as far as we're concerned, this is not current year activity, okay? Not the cost and the accumulated, okay? We need to focus more on the sales price and the gain or loss. But they've got all this listed to check your thought process. So the first transaction on here is $202,500 cost of office equipment. Well, they're just saying that's the balance in the general ledger. They're not telling you that was purchased this year. So this is not going to be shown on the statement and it's not applicable. The same thing with your accumulated depreciation. The actual balance of accumulated depreciation, the $84,375, all that's telling you is the balance. If they gave you the difference between the two, last year's and this year's, you could figure expense out, but they don't. They're just giving you the balance. So again, that balance is not going to be shown on the statement. It's not applicable. Okay? And you have another problem right after this. It's going to be the same situation. All right, so what about that sales price? Where would that go, and what are we going to do with it? What section of the cash flow statement is that going to go on?
Operating.
So your sales price of your office equipment is going to go in your operating section? What goes in investing?
Oh, wait, is equipment listed with property, plant, and plant?
Mm-hmm.
Oh.
It's office equipment. This is the kind of thing that you're going to find in the investing section. So, cash flows from investing activities. It's from because we're getting money. If they had bought equipment, it would be used for. All right, so is it added or is it deducted? And we're going to add it. That's cash in. All right, so you also have a loss on the sale of the equipment. So they ended up selling it for less than the book value. So that loss is going to show up on your income statement as a subtraction, like an expense would. So where do you report gains and losses from sales of assets?
Operating.
That goes in operating.
It's added as well.
It doesn't have used for, so that's the only one we got. And it is added as well because it's not a true cash outlay. It's just a loss, okay? So just in case y'all don't trust me, we're all green. Okay? There you go, a freebie. Huh? What about the assignment? The whole assignment? No. Sorry. All right, I'm gonna get out of that. Okay, let's go back to here and make sure this is gonna, I don't trust this thing. Okay, we're good. All right, so there is a free one for you. Now we're gonna look at the financing section. So financing, that's gonna be any sales of stock, repurchase of stock that becomes treasury stock, issuing bonds, redeeming bonds, buying bonds back, paying them out, dividends, paying dividends, that'll be part of that. Borrowing money from the bank. So loans from the bank, borrowing the money or paying the money back. All of those things are part of financing. So let's look at this problem. So essentially what we've got just kind of a snippet of the balance sheet, and it's just the piece we're working with on this problem. And we're going to prepare the cash flows from or used for financing activities section of the cash flows. It's just kind of like we're pulling this section out. All right, so you've got the balances from 2018 to 2019 of all the liabilities. Are we going to use all of these? Are there any that are not going to go in financing?
Financing? Accounts payable.
Yeah, it's, what does it go? Where does that go?
Operating.
Okay, this is operating.
This is a short-term liability.
Right, it's short term. And what we're concerned with in the financing section are long-term liabilities. So that's anything and stockholders' equity. Whoop. Sorry. So long-term is going to be anything that is going to be longer than a year being paid back. So it's not going to be accounts payable. Nobody's going to let you carry your balance due to them out further than a year, probably further than 90 days without hounding you about it. Okay, so they're kind enough to have calculated our increases and decreases for us. And here is some additional information. During the year, the company retired bonds payable at their face amount. So there's no premium or discount to deal with. They declared dividends of $20,000 and they issued $3,000 shares of common stock for $27 per share. So we have that information, we have these changes, and we need to prepare this cash flow from or used for financing activities section of the cash flow statement. All right, so cash paid to retire bonds payable. How much would that be? We don't have a discount. We don't have a premium to deal with. They redeemed them at face. So there's no tricks or calculations here. What will we put here? Cash paid to retire bonds. Y'all.
Is it just the full amount?
Work with me. They retired the bonds at face. The change. This is it.
Yeah.
Okay. Yes.
That's what I was asking.
No, it's all right.
There's a full amount and there was a certain amount less. So.
Yeah. Less what?
Well, it's not like it went from 330 to 250.
Right. It's the change because what they started the year with 330, they ended it with 250, so they retired 80. During the year, they would have debited bonds payable, credited cash for 80. All right, cash received from issuing stock. Okay, how do we figure that out? I got you some
Numbers.
help here. So you're going to put your increase in common stock, which is how much?
30,000. 40.
30,000. How much is your? I'm sorry, that was the wrong place. I meant to put that down here. 30,000. All right, how much is your increase in paid in capital? 50,000. So total is 80. Okay, why are we doing that? Because when you issue stock, you debit cash. When they issued this stock, they would have debited cash for $80,000. They would have credited common stock for 50,000 and credited paid in capital for 30. Oh, I got it backwards. Sorry. 30, and 50. How do I know that?
3,000 shares times the $10 pod.
Yeah, that's true. But also because you can really just look at it and say, all right, so when we sell stock, this is the entry we made. So the increase for both of these accounts would be the total we collected on it. But yeah, you could go about it that way. The $27 times 3,000 would tell you how much they sold them for, which really, is that the answer? 27 times 3,000? No.
81,000.
Oh, there
Yeah,
you go.
you.
I've got it
did,
off $1,000.
Yeah, you
But
put
I was
his
wondering
ones.
that because it goes from 250 to.
Okay, what should
No,
it?
no, no, no. What, okay, so pay and calculate the increase.
Mhm.
Yeah, it's supposed to be 51,000.
Ah,
Yeah.
that's it. I knew there was a mistake on here. Nobody said anything. See, now I'm gonna have to go back and correct them. I remember finding this and just I forgot to change it. All right, so this is 81,000. That's the money received from issuing stock. All right, then cash dividends. How do we figure that out? All right, we take our dividends declared. Come on.
20,000.
20,000, that's in your problem. We're gonna subtract out
2,000.
the increase in dividends payable, and that tells you how much was paid out in dividends. You can also,
So if there was a decrease in dividends payable, we could add it back.
if there was a decrease?
Yeah.
Yes. Think about it like this. Okay, so, well, I guess I can't really do that. I'm trying to record this. Think about it like this. Okay, so let's do a T account for dividends payable. Okay, so we've got the beginning of the year, our dividends payable is 18,000. So this is your beginning balance because it's the ending balance from last year. Okay, so they tell us that they declared dividends of 20. What entry do you make when you declare dividends? What would you debit? I told y'all I give you $500 if you answer the dadgum question. Somebody speak. I mean, I'm getting irritated. Y'all didn't do good on the last test. Y'all got to perk up and pay attention. Got questions, you got to ask me. I don't want y'all to do bad again. How do you record a dividend declared? Y'all cannot have completely forgotten that. Just throw something out there.
Dividends payable is.
You got dividends payable, right?
Credit dividends payable, and then
So you would credit dividends payable.
It's an expense.
Well, it's not an expense. It's kind of like draws. So let's say, I'm just using 18. Cash dividends. It's like a drawing account. It goes in stockholders' equity. Okay. So the problem says they declared dividends, $20,000. So the entry they made will be a credit to dividends payable. We would debit dividends, credit dividends payable as part of that entry. So we've got our ending balance in dividends payable. It's $20,000. Okay, that's 1231.19. So obviously that addition doesn't work. What do I need to do?
Debit or cash dividends.
We already did that here. We got to debit dividends payable. So how much will we have to debit dividends payable to get to 20,000?
2,000.
18 plus 20 is 38. But my balance is 20.
Oh, I see.
So we've got to debit dividends payable for 18,000. when you pay dividends, you're gonna debit the payable, credit cash. So that's how much was paid out. It agrees. So I mean, I'm just telling you a different way to look at it, or just use the formula. So what's going on? I mean, is it, I know the material is boring as almighty hell, but I mean, am I teaching it to you okay? Or y'all burned out? I mean, I just feel like y'all are just not here at all.
I got it.
Wait, we doesn't declare this, not.
You would declare them, because you're debiting cash dividends, crediting payable. Are y'all brain dead? What's going on?
Because like that made sense when you did it, right? Just how it is on the worksheet. That part made sense, but then when you
Yeah.
did that, it just like.
Well, I'm just showing you, if we had the transactions and we posted them to the ledger, that's what it would look like. Well, I mean, if it doesn't, if that confuses you, just ignore it. I'm not trying to confuse you. I'm trying to make
We're
it easy.
declaring a new dividends payable at the end of the next year.
Yeah, this is just your balance in the liability account. When you declare them, you're adding it to the payable. And when you pay them, you're taking them out of the payable. So see, you've got a separate cash dividends account. In your stockholders' equity section of your balance sheet, all it says is cash dividends. This is a liability. Does that make sense?
Yes.
Y'all dying. What's wrong with y'all? Is it me? If it's me, I'll try to do better. But if it, I know the material stinks. I told y'all I don't like this chapter. But
I mean, so far.
y'all hang in there. We only got 5 weeks. Y'all can do it. Y'all have done it before. You're gonna make it. What?
So far, I like it's better than bonds.
It's better than bonds.
I think bonds was easier than this.
Really?
Yeah.
Well, this one is hard to rationalize. It takes some time to rationalize. That's why I'm giving y'all all these tools to use when you're figuring this stuff out. Cheat sheets. Just go back and look at your cheat sheets. Look at page 5. That's all operating, all of it. So look at that. If it's not in there, it goes somewhere else, you know? And you should have all the answers you need in your worksheets, whether added or subtracted or all that. I know it's boring. I don't like it either. All right, example 10. Y'all, y'all run through this one real quick on your own. Look, I'm not trying to be mean. I'm just trying to get y'all not to, I don't want y'all fizzling out and failing on me. Y'all got to hang on. I see it at home. My daughter's burned out. And she takes prisoners when she suffers. We all suffer when she suffers. She shares. Yes, ma'am.
Did you go back up to the first one?
Mm-hmm. Which part of it? The whole thing? This? Oh, I didn't finish it.
Yeah, that's what I was like. I'm missing numbers.
Y'all figure it out.
I was like, ain't no way, it was just me. I was like, where does the 18,000 go? But I was like, maybe she wrote it, I wasn't paying attention.
No, no.
I was
Alright,
thinking about the
cash.
same thing.
Cash paid out for dividends, 18. Sorry, y'all. It's because I got on my soapbox. All right, so net cash flows from financing. It's not going to be from, because we're going to have a negative number. It's going to be used for. So change that wording to used for. Okay.
I was like, well, I got.
Got on my soapbox, got distracted.
I was like, well, I got the first two right. I don't know how to do the rest.
I was like, yeah, I'll just go back and ask that later.
Well, but that's the thing. Y'all gotta know what to do with it. You're using cash for something. If cash is going out, you're gonna subtract it. If cash is coming in, you're gonna add it. This section ought to be pretty easy, the past two, because it's pretty straightforward. The operating activities part, that's a little screwy. The changes in the accounts and stuff like that, you just kind of have to look at your page 5. Because it does get confusing. I agree with that. Okay, I gotta fix this issue on that one. Go ahead and change I don't remember the rest of them. If it makes you feel any better, we're finishing the chapter today.
What are we doing Thursday?
I don't know, probably reviewing. What y'all's next week look like? Like, you got tests on Tuesday, tests on Thursday, what's it look like?
Yeah.
Yes, okay. So what's on Thursday?
Thursdays.
What's everybody have on Thursday? Y'all got tests on Thursday? No,
Stats test.
stats?
Mhm.
You have nothing?
I have a biology test.
What about Tuesday?
Next Tuesday, I'm not.
I don't like having tests the first class day of the week, cause it's like, I don't know, y'all are Tuesday, not Monday. I definitely don't like having tests on Monday. I mean, you get the whole weekend to study on the one hand, but then if you don't choose to use that time to study, then. So I don't know.
We're
Yeah,
having a test next week already.
yeah, I mean, we're done with this chapter. I've got to think about it. I mean, the thing about this chapter, I don't know.
Kind of short.
It is. It's kind of short, and there's not. I don't know if there's quite enough material to like. I don't know. It may be like either a take home or an online or a something. I don't know.
Like a short quiz.
Yeah, I mean, I don't know. Because it, like you said, it is a shorter chapter. There's not a whole lot of material to like test you on. I don't want to make.
Unless you just get really.
I don't want to put too high point values on these questions and set you up to bomb, you know. So, and then the next chapter we're going to be doing is financial analysis. So it's
That's our final chapter. Oh.
no, can't stop there. We got 5 weeks left. That one, it's not real hard. I mean, literally, what you're having to do for your work is plug numbers into formulas and get ratios. And you're not going to have to like memorize any of it or anything like that. It's just learning what they're for and what they do and how to use them. So, I would say it's a fairly simple chapter. So anyway, I don't know. I've got to think about what to do on this one because again, I'm kind of like y'all, it's short.
Is the next chapter also short?
Mm-mm.
Oh.
Well, the thing is like 18, 19, and 21, if we get that far, 18 and 19 kind of go together. So I'll have a test on the 2 of those together. They'll be combined because they're about manufacturing and they work together. So combining them into one test is not going to be like you're trying to test on 2 totally different subjects like we've been doing so far. Every chapter so far has been completely different from the one before, so you really can't combine, or that would be awful. So
I don't know. I'll make it chapter 21.
we might, you never know. Don't doubt. All right, so on this one, we have got cash paid to retire bonds, $250. You've got cash received from issuing common stock is $200. And cash dividends, $15. So you've got 65 outflow. So we would change that to used for. Did y'all get that?
Mm-hmm.
Surprise.
All right. So the last thing we're gonna do is put it all together. Oops, I left that on there. All right, so what I want y'all to do first, we've got comparative financial statements or the balance sheet for this company, Harris Industries. And down here at the bottom, we've got some additional information. So what I want you to do is you need to go in and calculate the change, the increase, decrease. So for each one of these, just, you don't have to do lines if you don't want to, just put the amount of the change in this account. You can use like plus for increase, minus for decrease. This is your worksheet, okay? So some of them don't have any change. Like this one, there's nothing. And this one, there's nothing. So cash, you really don't have to do because we're calculating that whole thing, so you could leave it blank. But do, so that's up to you. Do the rest of them, then do the liabilities as well. It shouldn't take you long. It's not that bad. But this is important. This will help you do the statement. I know, I guess it's two of them, Greg. I'm trying to think there's something. Yeah, so all you're doing on there is taking the first column, take the difference between the first column and the second column, and tell me, okay, so the second column is the earlier year. So based on the change between that earlier year and the most recent year, is it an increase or decrease, and what amount is it? Don't do that part yet. Let me see. Flip it over.
Just
Well,
tracking
take the difference between all these. Did you fall asleep when I was talking about that? So like
I know we do.
this,
Yeah.
this, get the increase. That's all you gotta do right now. You ain't gotta do the back side.
That's what I did know how to do it. It makes sense.
Baby steps.
Makes sense. I don't know if my numbers are wrong, so that's the thing. And if they are, then we'll cross that bridge when we get there.
Y'all agree with that so far? Yep, feel fine with it because you just copied it down.
Just have that. I don't know, I just use the like.
Yeah, you gotta do the liabilities too. Really don't have to do this one, but. I'll get those copied down. We'll go through it. I don't want to do it.
That's what's good.
Then I test you and you have no idea how to do anything.
Oh, I will. You know,
You
what's
will.
wrong. You know how to figure out.
But I mean, you have a knack for this class. I mean, not everybody does. I need extra learning experience. Huh?
I can figure it out.
Everybody could figure it out, but would they? Would they take the time to do it? I'm not giving you your. If I let y'all go early every day, like just had 20 minutes, people get fired for that.
We won't tell. And if anyone says anything, we'll just be like, we all ran out of the room.
Oh, yeah. And I did nothing. I didn't report it or anything. I just let you go. I'd have enough. Y'all through?
Yeah.
Y'all get so excited. Now, come on. All right. So they give us this information at the bottom. They tell us what our net income is. Okay. And one of your homework problems where you have something like this, there's going to be like on the third or fourth option of the list, kind of like this, it'll say retained earnings was increased by net income of so-and-so. That's where you'll find your net income. It's kind of hidden in that. It's not just net income is this, it's retained earnings was increased by net income of so-and-so. So just be aware of that. Just keep reading. You'll find it. Okay, so we got net income of $524,580. We've got depreciation expense, buildings $51,660, equipment $22,680. Okay, so when we calculated the difference in our accumulated depreciation here, it's $51,660. I'm gonna cross that off because we're gonna go through that list. Okay, we're gonna go through the list, then we're gonna go through these changes. Well, our list has these amounts accounted for, so I'm just gonna cross them off. We're not gonna have to deal with those when we're looking at the changes. Okay, does that make sense? Maybe it will. Okay, patent amortization. the way amortization works, I mean, you can have an accumulated amortization account that looks, very similar to accumulated depreciation. But you also are allowed to just reduce the patent cost. So you would just debit amortization expense and credit the actual patent. Well, you see that patent went down by 50/40. So that's your expense. So we're just gonna mark that one off because it's in our list. We'll account for everything in this list. They've got that a building was constructed for $579,600. And if we look at building, it's $579,600. We can mark that one off. We're gonna address it. We're just not gonna address it. We don't want it in two places. We don't need duplication. Mortgage note for 224 was issued. Okay, well, our liabilities, there's that 224. I don't want a duplication of effort. So we got it in the list. We don't need it here too. Okay, then we've got stock sold and dividends declared, and we know from the last couple of problems, we kind of have to go through a calculation to get those, the number we need from those. So we're just going to leave those alone for now. Okay, so here is our cash flow statement, and we're going to fill this thing in. Okay, so cash flows from operating activities. What do you put first in that section? Netting. How much was my net income?
524, 580.
524, 580. Okay. So the next thing we're going to report are adjustments to reconcile net income to net cash flow from operating activities. So the first thing we're going to put in here is depreciation. So we'll have to add those two amounts together. So how much is that? We've got 22,680 and 51,660. 22. I can't remember the numbers. 22,680. Now you don't put this amount in parentheses on your statement. I'm just doing that so y'all know where the number came from. Anyone? Anyone? Okay, that's our depreciation expense. All right, the next thing on here, we'll put, you could just write amortization. They've got patent amortization. How much was that? 10,000? It was 10,000? I thought it was 5 million. What's the real number?
5,000.
The faster we get through this, the faster you can leave. So if y'all give me the answers, we'll get out of here faster. That's how that works.
I was paying attention and they said 10,000. I was like, wait, what?
Look, you know I screw numbers up, so I mean, correct me. It's okay. I don't take it personally. All right, so now we're going to look at the changes in the current operating assets and liabilities. So now we're going to look at these things here. Okay, now cash is what we're trying. The change in cash is what we should get at the very bottom when we're done. So we're going to look at all these other ones. Okay. So we've got the ones that are operating. So our first item is an increase in accounts receivable. So are we going to add that number or deduct that number? And how much is it?
73,000.
$73,080. Okay, so what would be next? Which account change would we look at next? There's one before that. Inventories.
Oh.
So is it an increase or decrease? Hmm? Okay, so we will add that one. All right, so prepaid expenses, is it an increase or decrease?
It's increased.
Okay, so we have an increase in prepaid expenses. Now I know how to motivate y'all. It's not even food, it's just letting you go early. All right, how much is that?
6,420.
Okay, so do we add it or deduct it?
Deducted.
Okay, so 64.40. All right, so what's next? I think that takes care of the operating assets.
Now we go to investing.
Not there yet. You gotta do the liabilities.
Oh, that's right, accounts payable.
Okay, so is it an increase or decrease?
Increase.
Okay, so am I adding that or subtracting that?
Subtract.
If accounts payable goes down, that means some stuff got paid. So that means your cash is gonna go down. And what's the next one?
All salaries.
So what's happening to that one?
There's also a decrease.
We got a decrease in salaries payable. All right, and how much was that?
1,120.
All right, we gotta add these. We gotta add everything we've done so far, add, subtract, get a total. And that's gonna be net cash flow is either gonna be from or used for. So if we get a positive number, is that from or used for? From operating activities. All right, so now we've got financing. So let's see.
First one. Or you said financing.
Mhm.
Or investing.
Investing, sorry.
Land.
You are listening. Some of you are listening. Land?
First.
Did land change?
Oh, no, buildings.
Okay, so buildings changed. We had a building constructed for 579.6. Okay, so we're gonna say cash, why it's different, cash paid for construction of building. I mean, you could say building well, I guess this is the best descriptive way. Thank goodness that the Cengage has choices, so you don't have to try to figure out what exactly they want. So how much cash? We got 579.6. And since it's cash paid, we're gonna show that as a subtraction, right? And so just bring that negative over here. $579. All right, so that takes care of investing. Then you've got financing. So we've got a mortgage note, we got the stock stuff, and we got dividends. All right, so make sure you skip these lines. Somebody in the last class started this section up here because we just got extra lines on that section. So just move down to financing. All right, so we've got cash from, I think you could say cash from mortgage note, but okay, so is that going to be an addition or a subtraction?
Subtractions. Additions. Right?
Yeah, you got cash when you took the loan out. So 224,000. All right, the next thing is going to be cash used for dividends. Well, we got to figure that out. All right, so cash used for dividends. Our beginning balance, or what was the dividends declared?
131.40.
131.40?
Yeah.
Okay, so 131.040 dividends declared. Okay, so did my payable decrease or increase?
Increase.
It increased by,
75.60.
wait a minute, what did I do wrong on that thing?
Nothing.
Nothing. Dividends declared is 131,040, right?
Yeah. And then-
Okay, so-
and dividends payable went up 75. Yeah, that's what I got.
What's my ending balance?
123,480.
Okay, so I should end up with this. That's not what I'm trying to end up with. All right, so we need to subtract out, what's the change? You said it increased 80 something thousand?
75,60.
Let's see.
Did you put an extra, like when you made it, did you put an extra one?
75, okay, I'm thinking 75,000, that's what's throwing me off, sorry. Okay, so we need to, it increased or decreased?
Increase.
So we need to take that out, right?
Yep.
7560,
So 123,400.
that's it, 123,480. Okay, so that's dividends paid.
So that's what we put down.
Mm-hmm.
That's a subtraction, right? From the,
Yes, decrease and dividends payable. Y'all make sure you're getting all this down before you pack it up.
Wait, where did the decrease in dividends payable? But increase.
Did it? Did it
but
increase?
increase.
Yeah, they increased.
You wrote decrease.
All right, so cash used for dividends, 123,40. All right, so now we need to get the difference between these two.
Wait, what about stock? We not,
I'll show you in a minute. Well, read the transaction about stock. That's a positive, so,
Oh, because they were exchanged.
on exchange for bonds payable.
yeah, so you've got a non-cash transaction there. Net cash flow from financing.
So we don't have to worry about
Not necessarily.
it. Not you.
Well, not in this part.
That's what, yeah, I mean, we don't have to worry about you.
All right, so add those three numbers together. And what do you get?
$82,320
Is that a positive or a negative?
positive.
So we have an increase in cash for the year, 82,320. Okay, so the whole year, everything in, everything out, our increase in cash was $82,000. All right, so our cash at the beginning of the year was $360,920. You can get that off the balance sheet. Now add those two together and tell me what you get. You get that?
The ending number.
Huh?
The ending number.
And that should be the same number that you have on your balance sheet for cash. If it's not, you've screwed something up. And trust me, I've screwed it up a million times. Okay. So I did this cash for dividends thing here, but what you would do with that other thing is just put it at the bottom. Schedule of non-cash financing. Just know you do this. I mean, if you don't want to write it down, fine. Because the bonds and the stocks, that's a non-cash thing. You're just trading one for the other. And it is 390. This is one of those things you report in that non-cash section, which it actually would be at the bottom, because you have debt being retired, and it's not a cash transaction. Cash is not being exchanged, but it is eliminating future cash outflows. So that's why you report it, but you put it in a separate section away from everything else. Okay, be gone. Have a good one. Hang on, let me stop this recording.
Can you go up?
Wait, yeah, I have a question.
Yeah, hang on one second.